discussion that we're seeing today is
What a load of rubbish.
But isn't that then the fraud?
How would you protect the vulnerable of us out there?
For you to actually recognise the most vulnerable in society before taking their money.
And these vulnerable people in the UK are also being robbed by their own banks, and that's not a problem.
The discussion that we came to today is cryptocurrency.
To make sure that people aren't using it for terrorism as a service or other.
At the risk of losing everything.
We do need a change.
You don't have the money to pay out.
So you don't have an answer, do you? You don't have an answer.
Hi, my name is Zahir Ebtekar, and I'm the Chief Strategy Officer at Plasma, a stablecoin neobank and financial infrastructure company.
Fractional reserve banking is the most normalized fraud in human history.
Hello.
Hello.
Normalized banking. I want to talk about the stability of stablecoins. Is that okay?
As it pertains to fractional reserve banking.
What I don't understand is for a stablecoin to have a deposit, the deposit is usually held in a bank. So if you're keeping your money in a bank, why shouldn't I?
You can keep your money in a bank, but you also can't restrict other people from keeping their money, in stablecoins or digital rails.
No, I'm asking, you want me to do something that you're not doing.
How am I not holding my own money in a bank account?
So where is the deposit then?
It's held with custodians, broadly. So in most cases, it's not just a bank. It can be any financial institution when they hold USTs.
Okay. And is it all legislated, even the custodians?
Yes. In the U.S.,
Okay.
We're moving in that direction. The Clarity Act, which is in the Senate now, this is moving in the direction of more regulated and more transparent environment for stablecoins broadly.
Okay, so Senate implies U.S.
Yes.
What about here in the UK?
Every other country follows what the U.S.'s parameters are, broadly speaking. So
Well,
now,
that's scary.
for better or worse, this is the global dynamics that we've all co-signed.
Thank you very much. Can you please explain the fractionalized bit for me, please?
Well, I think the problem that people have had in the past is that, especially in the U.S., but also globally, the broader banking sector has not been the most stable when it comes to, and it's supposed to be the bedrock of society, right? That I can go and deposit money into a bank account and that money should always theoretically be there. But banks don't have to actually hold that liquidity ratio that they claim they need to.
That's right. But you do.
Yes. Stablecoins are always redeemable one-to-one.
Okay, so you're saying that the fraud that exists within banking because they're using your money to do other things doesn't exist within the stablecoin?
Yes,
because
correct.
it has to remain on deposit?
For regulated stablecoins and the largest stablecoins that are globally adopted, this is the case.
Okay, and what happens when you're oversubscribed?
In what way?
So deposits with you can't exceed the deposits for your reserve, is that correct?
Well, the deposits, there's always going to be a buffer ratio, but it's going to be theoretically very small just for liquidity, but there's always going to be an oversubscription. So there's always going to be one-to-one redeemable for in-kind U.S. treasuries, overnight rates, that sort of thing.
But isn't that then the fraud? If everybody chooses to redeem and it's one-to-one and you're oversubscribed, you don't have the money to pay out.
No. I think I'm saying the opposite. Right?
Okay.
So there's always going to be one-to-one, dollar, UST, overnight rate, whatever it is, for that stable coin that exists. And there's legislation that now determines exactly what that ratio needs to be.
So you would have to stop new subscribers from subscribing.
Correct.
Okay.
And those subscribers are subscribing in kind, right? So if they are buying more USDC, USDT, that needs to be replaced by another dollar.
So you could choose to deposit greater sums to have more subscribers.
Correct. There's always going to be a mint and redeem function, and that is being legislated.
Thank you. Okay, I'm giving myself the red flag.
Kevin Smith, I spent 40 years in the city in finance and banking and large payment transfers. Following on from that conversation, stablecoin, yes, it's linked to an underlying asset that, in your view, but may not be in others' view, is stable.
Yes.
But the value of the US dollar can change rapidly, and so can the value of government treasury bills. So the underlying asset can still change in value. Is that correct?
Yes. But the underlying value is denominated in the currency that you subscribe into. If I'm holding one US dollar equivalent stablecoin, then on the back end, there's one US dollar or equivalent.
But you can't predict any asset's movement on a daily basis. So by that definition, although it's the word stable, it's still going to move in value. Not as much as cryptocurrency would, but you still have an underlying asset that's going to move in value.
The underlying asset is the subscriber asset. In this case, it will always be one-to-one to whatever the underlying value is. And that's where the stability comes. The stability is emphasizing the point that the US dollar that I'm subscribing into is always going to be redeemable for $1 US. Not €1, not £1, but $1.
So if I come to you and say, I want to invest $500 million, but that's too much for you to accept on your, say, ledger, you can turn around and say, no, we can only accept so much as a deposit because of the underlying stable currency. Is there a limit on what I can invest?
There's no limit, but broadly, these things are just batched. But there's no limit. There's already $300 billion plus in stablecoins globally.
So it's against basically what, the amount of dollars in circulation or US Treasury bills?
Correct.
So there's still an underlying volatility.
There's only into the subscriber asset that people want to go ahead and place money into.
And we talk about volatility and like the 2008 crash, and the reasons don't need discussed here. But any market is a market. The value of the demand and supply changes daily. The value of the assets can go up and down. Mm-hmm. Although people are saying, oh, it's a stable coin, yes, it's not as volatile as pure crypto where you can win and lose millions, but there is still an underlying volatility on any digital wallet or currency you set up, isn't there?
And that underlying volatility that we're talking about happens primarily in fractional and reserve banking, in the banking sector that exists for hundreds of years now. So the problem isn't that there's a stablecoin volatility market. The problem is the fact that when you go and open up your Lloyd's bank account, how much of those dollars that you see on your screen are your own dollars that you own? How much of that is being lent out as a bank's balance sheet? And the advocacy for the stablecoin is that this is as close to one-to-one as any bank could theoretically get to, whereas most banks are running 10-to-1, 20-to-1 liquidity ratios on the actual dollars they have on their balance sheet.
So if it's almost one-to-one, why do I need to go into stablecoin when I can just buy dollars through Western Union?
There's a few different reasons. Number one, there's a massive markup when it comes to going and swapping currencies. Number two, the other problem also becomes that you want to deal with the fastest instant settlement currency, and that's through stablecoins. So it's 24/7, 365 without any sort of friction and at virtually zero fees to be able to send, receive, spend money.
And how will Plasma One make money? Because are they fee-based, transaction-based on the changes of interest rates or exchange rates? They have to make money somehow. And at the moment, traditional banking, for most banks now, there's no fee.
Correct.
So how does Plasma One compete with that? They are Barclays, NatWest, Lloyds, HSBC on your current account. Yes, there's no interest rate, but they're not charging a fee. What's Plasma One offering that's different?
When they're not charging a fee, they're just taking the spread on the underlying asset that the bank is holding. So in this case, if the bank is lending that money out to the Bank of England or to private lenders, it's collecting the spread on whatever that is. Usually it's going to be close to whatever the central bank sets the limit at. So that's a 2 to 3% fee. In the same case for stablecoins, there is an implied yield that is underlying on the stablecoin that the stablecoin issuer is making. That yield can be passed through, and this is changing now in the US, but that yield can theoretically be passed through down to the user. Barclays or other bank accounts in the UK that have have deposits, they're not charging you a fee because they're just taking all of the money they can out of the spread that they're taking on the underlying asset.
Yes, they're not paying you interest, but you're saying that you will pay a yield or effectively a rate of interest on that money you have, say, dollars in your digital wallet. Is that correct?
Yes, the issuer will pay the program. In this case, it would be us. So the issuer, it could be Tether, it could be Circle, will pay the program that is, has the stablecoins on their ledger.
Effectively, then they will pay a rate of return.
Correct.
However you want to call it.
And it's substantially higher than what exists for a traditional bank account. And that's why you're seeing newer bank accounts are actually giving all of the yield as opposed to older, more traditional banks that are not giving any of the yield.
And will there be fee per transaction? How will it work?
No, there's no fee per transaction.
There's no fee per transaction.
Correct. Our blockchain is designed to be as feeless as possible. And on the stablecoin rails, it's zero fees. The only additional, expense will come to the user that it applies as interchange when they go and tap their card on any terminal, which exists for every single bank, financial institution in the world.
Thank you.
When you deposit money into a bank, you are legally an unsecured creditor. You do not own that money, the bank does.
I'm Art Douglas. I was with a private equity company, the CFO, for 17 years. So the person that has given you money to buy your stablecoin, where does that money go? They paid you actual dollars. Let's say they have actual dollars.
So the issuer in this case, which is Circle, can go ahead and make that swap happen instantaneously. So they'll take the USD.
I want to buy a stablecoin from you for 100,000. I send 100,000 somewhere. What happens to the 100,000?
That 100,000 will go and get minted at a stablecoin issuer.
It doesn't need to the 100,000. Okay, let's say it's actual bills. I come in with cash in a big bag.
Oh, we can't do it
Give
with
it
cash.
to you. Okay, that's not my point. My point is that you actually get 100,000.
Yes, the issuer gets $100,000 that sits in a custody account.
Okay, the custody account.
Yes.
And the custody account is a real account at a fiat bank somewhere.
Correct.
What if that bank goes under?
This is actually a scare that happened. So, that's why there's going to be legislation around how stablecoins are regulated and where they can hold their ratios.
If I hold a stablecoin and the custody account that you're talking about, with the bank that holds the custody account you're talking about goes down, how can it be that my stablecoins are still worth what they were before if the custody account is gone?
Because the custody account that will exist in the case of future legislation will exist in a world where there is clear as day regulation that exists for that stablecoin.
So you're saying the rules will change in the future such that the stablecoin will be covered. Why can't the rules change for normal accounts that anyone holds with it?
They can. It's just not in the bank's interest to do so. So why would you change it? The banks have no interest in holding, one-to-one dollars to any form of digital issuance.
That's because they lend out the money again to try to make some money so they can pay their depositors an interest rate.
Well, they can do that with also just holding USDs and having liquidity provided to them at all times. They're not
Somewhere there must be somebody taking that money and using it to invest in real activity in the economy.
In USDs, they can hold it, right? But then the regulation will stipulate that, they have to hold a, specific amount of money.
USDs are sort of
correct.
Another
the difference
example.
Exactly. And then the difference is that, banks, it's a black box where that money goes. You don't really have a clear, no bank in America, no bank in the UK, as far as I understand, or in the Western world in general, has a specific designation of this is exactly where you have to invest across the stack.
No, that's true. Yeah.
For stablecoins, this will exist.
But you still have a custody account. The money that comes in to issue those stable coins goes into a custody account. The custody account is held by a bank, and the bank can do with that money what all banks do with money.
That money that sits with this, they're buying USTs in most cases.
I mean, you can't guarantee that for one thing, but
and that's the credit of the United States, of America, right? So,
that
is a preferable reality for people who live in the global South, where there's regime change that happens every 5 years, and that's where the majority of adoption happens.
Well, that's something I wanted to get at, and it doesn't relate to this particular prompt, but it seems to me that you're saying you're helping the third world by giving people the opportunities to buy these coins, but money comes from them. It goes into a custody account in the U.S.
Yes.
If they were back home, they'd be forced to take that money and invest it in something at home.
Well,
so it sounds to me like you're siphoning money out of the global South.
Well, the money is still digital dollars that people can go and transact in. It's $1 in any country, right?
So
actually, there's a premium in most countries where there's a premium to buy more dollars. So in a lot of countries, internationally,
but most of those people are just going to be buying their stable coin and sitting on it.
They can get paid in, if I'm a remote contractor working in Venezuela, then I want to get paid in USDC, and I can have my, money sitting in that account, or, Tether or whatever.
Yeah, but if I were investing it, if I had money for some reason, I'm a person in the global South, I had money to invest. I put it into a stable coin, and then if I just hold on to the stable coin in order to have something stable in my hand.
Well, you'll spend the money eventually.
Yeah, I'll spend the money eventually.
And the merchant will take it just like they take any other, just like they take local currency.
So in the meantime, the money has gone into a Western
Correct.
economy instead, and it won't be back
The
home.
physical underlying asset will be in
the Western country. So
Correct.
I'm coming back to where I said you're siphoning money out of the global south where it could be put to use.
The problem is
it's not being put to use.
Yes, exactly. That the user of the stablecoin should be able to make the determination of whether or not they want to go ahead and keep the money within their local economy or not, right? If they're opting for dollars, regardless, they'll find a way to get dollars. Before stablecoins existed, people were fighting each other over physical fiat cash, right? Yeah. There's countries, even developed countries, that were fighting that are fighting to this day in the Gulf to get more pallets of physical USD because they need to maintain their peg. So in the same way, there's people who are fighting before this to get physical USD in their countries because the global system relies on US dollar hegemony.
Yeah. Okay, I'll have to flag myself.
In 2026, a wire transfer still takes days and costs a percentage of the transaction. That is not a technical limitation, it is an industry protecting its margins.
That's not correct, because faster payments now can take seconds, and each individual here has a limit of £250,000. Is that correct?
That is correct.
So I can transfer money to any of these people here off my phone in seconds, can't I?
Correct.
With our previous conversation, you mentioned that I have a traditional current account. If I hold it in a digital wallet or hold dollars in a digital wallet, the difference will be, instead of receiving no interest, I will receive an undefined yield based on the underlying asset. That's the only difference towards a current account, would you say? Or are there others?
There's bank-to-bank differences, so it's whatever the provider has, right? Some banks in the UK will offer you whatever the, Bank of England rate is for 10-year, 5-year notes, whatever it is. But some banks will not, right? Maybe Lloyd's doesn't and, Barclays does. I don't know. But that's a bank-to-bank difference.
But you can transfer money in seconds, but I can do that under the current system. We were with BACS. BACS was 3 days. The CHAP system is £20 million plus. That's big ticket. It used to be BACS, which was input Monday, match Tuesday, settle Wednesday. But now we have a system called faster payments. And each individual who's a bank, you've got a 250,000 limit. That is not for money laundering or fraud. It's because they don't want the system to be overwhelmed, and that will gradually increase.
But that system to be overwhelmed only happens because banks run a fractional reserve system. Otherwise, if the liquidity was matched 1-to-1, you could send $100 trillion tomorrow. It wouldn't make a difference, which they do between themselves. They don't do it for consumers, though.
It's not then that they're worried the software or the hardware could not cope, and you would have so many transactions that the system would freeze.
There's no possibility that the hardware or the software of the system could freeze from, transactions happening at a current account level. That just will never happen. It will happen from the perspective that there's not enough liquidity between the banks when people are, sending and receiving. But it's also because this is just a legacy, outdated system written by people, 30, 40 years ago. Even, when we want to talk about, what has kind of come out of the stablecoin revolution or the digital revolution in general, the banks are not trying to offer faster payments as a courtesy to users. They're only doing this because there's better forms of money out there and they need to compete. Otherwise, they will lose their customers too. This is why Revolut is so popular in the UK. People can talk about how Revolut is not a bank and it's a financial services platform and this and that. They are still taking the overwhelming majority of new accounts that, end up coming for young people in particular.
One question, I think it was going to be raised in the last sentence, is that a few years ago, Nigel Farage was debanked. Coutts decided he was a politically exposed person. There was no legal requirement to do it. It was just the bank decided to do it.
Yes.
Does that scenario apply to digital money?
No, it doesn't. Only when there is a federal in the U.S. or a governmental process where, an individual is deemed for whatever judicial process that they cannot have that account or cannot have those assets or they're illicit or whatsoever. That's the process that we would have to go through.
So if Nigel Farage had a digital wallet, he would keep that.
Through Plasma One in its current form, correct.
Right.
Unless he was specifically debanked for a particular reason.
Okay, thank you.
Thank you.
Systems that can freeze your account without court order deny you access to your own money and face no consequence is not a financial service. That is financial power over citizens.
Hi, Jonathan. Nice to meet you.
Nice to meet you.
Just taking that from the last conversation, what a load of googly-gook, okay? What a load of rubbish. Great, you're sitting in a room, two bankers having a conversation with a lawyer. But how does that attach itself to the common man in the street that's got 20, 30, 50 quid to put into Bitcoin? How are you dealing with that? Do you know anything? Let me just ask you a question. Out of your 500 million that you just mentioned, okay, how many people have a net worth of under £1,000 that are putting money into Bitcoin?
Well, if we move the conversation back to stablecoins,
I don't want to. No, I'm going to talk about people, not money.
Sure.
Let's talk about people, not money.
Sure, we can talk about people. But if we want to talk about stablecoins, which is the topic at hand,
No, I want to talk about people, not money.
Sure. But
so let's talk about people,
I'm
not
talking
money.
about your conversation about Bitcoin.
Okay.
Let's remove Bitcoin from the conversation. Let's talk about stablecoins.
Okay.
When it comes to people, the overwhelming majority of those people are under the £1,000.
There we go.
Correct.
There we go.
And they need it more than anyone else.
Oh, do they? Why?
Correct. Because when
how does
you
that equate with the Equality Act in the UK?
And
how do you deal with people with disabilities?
When
do you have any understanding of people with disabilities and the FSA rules and guidelines on those?
The overwhelming majority of stablecoin users globally are people that live in the third world, are people who live in the global south. And those people need access to a currency, a store of value that is stable, right? So if I live in Nigeria, if I live in, anywhere else in the global south, my currency is moving all the time. I want to hold my money in dollars, right? Okay. And that's why the overwhelming majority of stablecoins globally are US dollar based.
Okay, let's talk about traditionally regulated countries like the UK, like Europe, whatever, where there are infrastructure around what people can do within banking and how the banks can deal with those people. And I'll give you just an example. I've got somebody with, I don't know, let's throw it out there, ADHD. And but you don't know they've got ADHD, and you don't know they have any special requirements at all. They go online, they bung £1,000 of their own money into your coin. Okay, how do you deal with them?
Just like any other bank would deal with them.
No, it's not. No, because there's regulations, isn't there, around every other bank? There is a process to go through in terms of accessibility in the UK. So I think it's FSA Rule 4.1 or 4.2 in terms of accessibility guidelines, in terms of taking money from those people. How do you go? So you're not dealing with them like every other bank at all, are you?
When it comes to anyone who's using our financial products, we offer...
So what accessibility do you have in place to deal with that community?
The community of people who...
With the disability community? Because fundamentally, you're talking about 1 in 3 people in the UK that have a disability. So how are you dealing with it? What are your presumptions to deal and help those people through their investment plight?
Just like any startup in the world would deal with this problem.
So they won't deal with it?
This is something that you can...
That's the point, isn't it? They won't deal with it.
This is something that you can go ahead and work towards.
So you don't have an answer, do you? You don't have an answer.
When did this act pass in the UK?
It's been, the Equality Act has been in place. 1989 was the Equality Act.
1989. Yeah, and before that, what did they do?
Sorry?
And before that, what did they do?
They had other acts of Parliament that were in place before that. There was the 69 Act and the 71 Act, I believe. But fundamentally, we've been dealing with equality like in Europe for many, many years. Okay? So fundamentally, my view would be that there needs to be a legislative change for you to actually recognise the most vulnerable in society before taking their money.
And these vulnerable people in the UK are also being robbed by their own banks, and that's not a problem?
Well, they're not.
You want to talk about equality, and then you want to not talk about the fact that they have active money laundering cases against them? We had 2 of the largest banks in the world go under in 2008.
So my question is, because you haven't answered the question, what are you going to do to actually connect with the poorest in our society, within a regulated society, to allow them to actually have the right advice and the right metrics to actually deal with you, rather than just take their bloody money? Sorry.
This is the exact problem we're trying to describe, right?
Okay.
And this comes back to the original point, which is you're making it seem like banks are advocating for the bottom of society. Everyone in this room would laugh at that argument.
I wouldn't, because at least they're regulated. They're in a framework. You're not.
We are.
So what framework are you in?
The Bank of England
What framework are you in?
The Bank of England is actively moving to bring out legislation
Well,
with
no,
regards to stablecoins.
2027. No, it won't be the Bank of England. It'll be an Act of Parliament 2027, right?
And the Bank of England is looking for guidance in the UK as well.
But I'm not actually talking about those guidelines. I'm talking about FSA guidelines in and around vulnerable people.
And that applies to a bank, which we are not.
Okay, so you want to be a bank sometimes and you don't want to be a bank at other times.
Their banking regulations has their own guidelines and rules.
Okay, that's fair enough. I mean, I'm just trying to get this argument because I basically, I'm concerned. Your opening comment and message to me in this was you're dealing with mostly people in the third world who just want
Which we are.
Okay,
And these
you are.
people they don't care about stable coins, which is the beauty of it.
Okay.
And they shouldn't. What they should care about is being able to save in stable currency because their local governments and their banking infrastructure is robbing them.
Sorry. No. I think that what we've got here, if you don't mind me saying, is a wide boy culture. Okay, and it's the same as where we look back at the 80s and we look at what went wrong in the City of London and the scale of mistrading and everything else. Fundamentally, what I'm trying to get to is how this actually works with a common man in the street, the one that's got the vulnerabilities, the one in three that have got fundamentally the day-to-day problems in and around money. What I don't want is a situation where people are putting money into your organisation and your venture, okay, and they're taking out of their disability allowance to do it to survive. Fundamentally, I think we need a structure that aligns you to the same rules, okay, as the banking community in the UK. And I think that's where we're going, obviously, with the new legislation that's coming in within the European Union as well. And hopefully, just for once, the British and the Europeans will be much, much tighter on this than what the Senate are doing, because I've seen some of the stuff the Senate are doing, and quite frankly, I think it's wish-wash politics to feed the few for their own gain. However, from my side, I've taken your answers on board, and to me, you're basically saying to me, we don't care about the bottom 33% of the community. That's what I'm hearing from you.
What we're targeting originally is the idea that people in general, regardless of race, background, disability, or otherwise, need access to a more stable currency.
I'd agree with
need
that.
access to
I'd agree with that.
frictionless banking, need access to their own money without having intermediaries that are unforgivingly taxing them throughout the entire process.
So but we
need the goal is
countries need tax, they need revenue, and
I'm talking about taxing on the system, not on actual taxes. I'm talking about people getting charged fees that are erroneous, that they don't understand because they have no concept of how financial infrastructure works. Waiting for the government to be the right arbiter of what looks like the right idea has always been a mistake, right? The government
That's why we need lawyers, right? And that's why we need political structure to conform, because actually the bottom line is without political and legal structure, we may as well all be in the middle of a sandstorm, basically all robbing each other, because that's fundamentally what happens if you don't have structure. So my message to you is, and this is what I'm seeing, is you need to conform to the same structure as the financial institutions, because I'm not worried about whether you've got money in your pocket and whether I get shares and dividends and I can spread those shares and dividends and what I can invest in. I'm worried about the man on the street who's got bugger all.
And we're just as concerned for these people.
You need to show it, and you need to be regulated.
And we show it directly in the products and the support that we are building out.
Okay. It'll be interesting to see how that evolves, because I'm not seeing it at the moment. That's fine.
The question relates to freezing accounts without a court order. I don't really know what banks do that without a high risk of a court order coming through that will order them to freeze the accounts. And they try to freeze the accounts in advance. And you're saying that is a bad thing.
It's arbitrary.
Well, let's say that one of your stablecoin wallets out there is held by an individual who's providing elite customers with. And in that global south, there are plenty of content providers that want to get paid by him when they send him content. And he uses that wallet to pay those content providers. Now you're saying that a cryptocurrency, because it's non-regulated, won't be able to shut down that wallet.
Well, the cryptocurrency in this case, which are stable coins, the topic of conversation, will be regulated for one. And for another, they get shut down all the same as other court-ordered directions from any sort of civilized society that goes and shuts that system down.
Well, wouldn't it be a good thing to go ahead and shut that down in advance if you know that this particular...
And then you become a financial...
So it could also be what you're calling an arbitrary decision because it's not a court order.
What I'm talking about is systematic racism and discrimination against a certain group of people when it comes to banking services.
Yeah, there could be profiling done eventually. They could say, we know this particular tribe in Nairobi are engaging in child pornography.
I'm not talking about that there. I'm talking
like
about that here. I'm talking about that in the U.S. I'm talking about in Western societies.
Oh, explicate then. What
I'm a Muslim with a Muslim name.
Right. Okay.
I will get flagged 1 time, 2 times, 3 times over from Revolut anytime I send a non-trivial amount of money. And that's only because their fraud checks are done in a way that's fully arbitrary based off of my name, my background, and there's no reason or rhyme. I provide the same documentation as anyone else, and they'll go ahead and block that for, to make my life more difficult. I've had friends with their accounts shut, not just in this case, but in other cases as well, right? Because the existing financial system only wants to benefit itself. It does not want to benefit anyone else, and it will only do so insofar as it is beneficial to themselves. So we're seeing even a change in conversation now when it comes to big banks, financial institutions, and their desire to expand into stablecoins and crypto. And that's only because they see the inevitability of the tide changing, not because they are actually magnanimous folks.
But you would then also see with increasing regulation of stablecoin that you might also come in a situation where stablecoin providers are being expected to flag.
That's at the bank level. That's not at the federal government level.
They won't be able to see the wallets are held by people with Muslims' names because it'll only be a private key.
In the case that they are transacting within the society, they will be able to have an identification of who this person is. Our product is a KYC product.
Right. Okay.
You have to provide documentation to be able to use it.
So with increasing regulation, your company could also become liable to start racially flagging.
But not racially flagging. That's actually against the law in this country and in the U.S. and in
you're
other
saying it happens anyway.
Exactly.
So why won't it happen for stablecoin providers?
Because it's a new crop of the financial industry that's coming up in the world of fintech. It's not the existing crop of people who are just arbitrarily going and doing the exact same checks that they've done for a century.
Well, then the hopeful person could say that new crop of bankers will also be in traditional banking as well.
I think that could be the case, but they are splitting and diverging more and more. And the worlds between stablecoins and traditional banking are merging faster and closer than they ever have in the past.
And I suppose you could argue that the stablecoin, the blockchain culture is influencing the traditional banking culture.
Every young person out there has some exposure to crypto, fintech, something of that sort. Even in this country, you're seeing a massive adoption of fintechs in general. The only goal is that these people are being arbitrarily maligned only because of their background, which is again illegal in this country and in most of the Western world. And that's just not a okay practice that people are happy to deal with only because the banks are a pseudo-government organization. And when it suits them,
You're kind of riding on the culture of the people who are doing the stable coin products, because a traditional financial product could just as easily have take a moral position towards non-profiling of their
but they haven't.
But they could. It doesn't have anything to do with the technology underlying it. But you are pointing out that
in this country, correct?
Yeah. How much proof can you cite sources of research done in that particular area?
100%. This exists. I had my own account flagged at Revolut multiple times, and when I asked support from Wise and Revolut, they both said, "Well, it's because of your name." So there's no other reason or rhyme that exists.
So, but the reason that it's not happening yet in stablecoin and cryptocoin is because they're not regulated yet.
Well, they are being regulated right now.
They are being regulated,
but it's not because
probably expect the same kind of temptation on their part to just buckle down and do profiling.
But the inherent spirit of the space is to give as many people financial service access as possible. And the underlying fundamental point that matters here is the fact that whether people want to say that there's illicit activity that exists or in some third world country, that exists in the traditional banking sector anyway. And we're penalizing other people who are just normal folks who want access to financial services.
That's 5 flags, thank you.
I'm Kai.
Nice to meet you.
I'm a politics student at KCL and I do social media as well. Earlier, when someone talked about accessibility of stablecoins, you said it's great for people in like disadvantaged areas of the world because it allows them access to.
They give everyone in the third world the access to hold dollars, the access to hold a stable form of currency, and to get access to financial services that they otherwise would not be able to.
And then what do you do to make sure that people aren't using it for or terrorism as a service or other like immoral ways?
The same exact guidelines that exist at the country level, at the international level, which is making sure that any sort of illicit activity that exists with our product or any sort of similar products are being batched and removed from the existence. The important thing to remember is that stablecoins are inherently the most transparent form of finance. It's all published on a digital ledger that everyone has access to and can check and see exactly where things are going. There's been multiple, FBI crackdowns, CIA crackdowns that have existed with the stablecoin issuer and, the form of enforcement for a local government when it comes to any of these heinous acts.
So if you are checking through every single transaction, how is that any different from a bank, or how are you not like discriminating against certain people? Like you were saying, like with your name, you find it difficult to go through traditional banks. How are you making sure that you're not doing the same?
The difference is that I'm living in the Western society that is abiding by every law possible. Someone living in the third world that's peddling is classified in a completely different universe.
Yes, so how are you stopping that?
How are we stopping that?
Yeah.
In the exact same ways that every other financial institution will have to do, right? So it's making sure that you have risk monitoring on all of the transactions that go on any blockchain. This exists for every single blockchain out there, by the way. There's multiple firms out there that actually do risk monitoring, AML, KYC, to make sure that there's no illicit activity that's going on.
And so if your main aim was to help disadvantaged people in developing areas, why didn't you go into different types of fintech, like, biometric digital identities, where like people in rural parts of Africa can use their fingerprints to get access to money that they usually wouldn't be able to get? Why aren't you investing in that kind of fintech, and why are you putting money into things that can be used immorally?
It's a stepwise function to be able to adopt as much of a new technology as possible. You cannot go to a third world country and say, well, why are we not giving them 5G access tomorrow? Why are we not putting cell towers all across Africa? The goal over the long enough period of time is for people to have the best form of money at their fingertips and making sure that, any of the bad actors are screened out.
And do you believe that the best form of money is the one that's the easiest to do bad things through?
The best form of money is the one that gives the most amount of people the ability to go and transact and be a part of the broader financial services. So
why aren't you focusing on like telecoms or something to help people do that?
Focusing on telecoms?
You mentioned like 5G access. If that's such a great thing, why aren't you working in a field like that if your aim is to help people? You're advertising yourself as someone that's helping people in poor areas gain access to all kinds of financial services, but the work that you do kind of contradicts that.
Why does it contradict that?
Because
we're giving people the access to hold dollars instead of their local currency.
But are there not other ways to also help people in these areas?
I'm sure I could become a doctor and go solve cancer as well, right? Within reason. Mm-hmm. Why don't I go do that? I can do 101 things, right? There's no need for me to do anything. I fundamentally believe, in my role and in my job, that stable coins are the best form of money, and that if I give enough people globally the access to be able to save in the local currency, they can go and be the heroes that they need to be for their own societies. I don't need to imagine, what my role can be in for them. But more importantly, just being able to empower them and give them access to financial services is the stepwise function to make the rest of their, universe better.
Okay. And just as a question, so say if there's someone in a rural village in the middle of nowhere, how do they actually make these transfers? Like if they don't have a phone or anything, what are you doing to help these people with absolutely nothing gain access to your stablecoin?
I think it's very easy to go down the curve here and really think about like the most disadvantaged folks. And while yes, that is a massive contingent of people, the focus is on people who have access to a phone, to being able to use some service, but are still being penalized by their government, either for unfair taxes or for, confiscation of their money or for censorship, for those people to have access to their own capital.
Okay, so it's not for everyone. It's just people who can have access to certain technologies.
Correct.
Okay, so there is a limit on the people that you are helping.
But over time, technology just swarms everything, right? The rate of change for the internet being adopted globally has gone from something like 20 to 30% in the early 2000s to now almost 80 to 90% of the world.
But are you doing anything to also help with that, or are you just trying to ride the wave and then make money as these technologies expand?
We can only focus on the core contributions that we can actually deliver, which is making the best form of money available to people who have the necessary stepwise function to get to the next step.
Do you help in any like charities or extra things to help these other people gain access to technology to use your product, which is going to help them so much?
I was on a panel once with the largest issuer of stablecoins in the world, and he told me something very important, and I was interviewing him, and he said that stablecoins have done more good for the global south than any other form of technology and any other form of charity work. And I was genuinely surprised when he said that. And I thought about it and I was like, I think he might be right.
Hi, I'm Laura.
Nice to meet you.
And nice to meet you too. I am a traditional banker. So processing the conversations that we've had so far around stablecoin. One, I am curious about the arbitrage that you were talking about. And I'm sorry to hear that in your experience that you've been racially isolated due to your name. You mentioned a traditional bank and you mentioned Revolut. Revolut has only just got its banking license.
Correct.
It's a digital fintech platform bank. That's not a traditional bank.
Correct.
I've worked in banking for 21 years and I know my clients. I know everything about them from, early years, their career, how they've made pound for pound. Yes, you're going to come across people that will tell you fables and stories, but there's data and there's evidence to support that. So with data, the advancement of AI and understanding algorithms, I do believe that we're seeing less and less unfair freezing
Agreed.
of accounts. There are occasions when absolutely assets need to be frozen.
Fully
and
agree.
we're just, okay?
Yes.
We've spoke about, we're talking about terrorism, we're talking about laundering for drugs, people trafficking,
Yes.
all of the illicit things that go on in our world and the terrors that are out there as well. As a consumer, again, with a traditional bank, protected by the Prudential Regulation Authority, you're protected by the FCA, you have consumer duty to have a care of justice for your customer base. That's what I want to understand a little bit more about, sat across the table with you now, is talk to me through the onboarding journey. Talk to me about your customer base. So what does that journey look like? What interaction are they having? Is there a person they can pick the phone up to and ask questions to be informed in making these decisions? Because again, those that aren't necessarily financial illiterate can go into a bank. They can sit down. And in my experience and in my time as a banker, I've built that trust with customers. I've sat down, I've spent time with them, I've educated them around what a bank account is, how a bank works. I just want to understand a little bit more about the digital currency. I get where you're coming from with a stable coin not necessarily being a cryptocurrency that is incredibly volatile and does give the wrong person the autonomy to be able to move their money very quickly, and then suddenly it's gone and you can't trace it, you can't get it back. So talk to me about that onboarding journey.
There's one important thing that you mentioned, and I think has been mentioned a few times around the room today, which has been around the topic of conversation for illicit transactions, terrorism, whatnot. The single largest form of transfer that exists for all of these illicit activities will always be the traditional banking system and cash systems. Fiat systems and the traditional banking system is the number one way that terrorist financing happens globally. Statistically, this is always going to be true. Stablecoins are inherently transparent, so it makes it very, very difficult for anyone to do anything illicit over a long enough period of time because they will get cracked down. And this has happened time and time and time again. And the two largest stablecoin issuers in the world that account for something like 90% of all stablecoins, they are in active conversation with every local, foreign, and international body in order to crack down on any sort of illicit transactions. Going back to the user journey, that's very, very important to us. We fall into the same category that a existing fintech platform would exist in the UK or abroad. And the really important note to get right here is that our journey begins with the consumer.
Mm-hmm.
When they log on and they want to create an account, they want to get access to financial services, we only provide that once they've passed our KYC checks, our compliance checks, making sure that we are able to screen out any of the bad actors and being able to use the newest, best technologies in order to do that. At a traditional bank, a lot of these existing systems only exist through, a manual review process or, someone that could be invaluable, right? And, in your case, right, all of your, consumers, all of the people that you work with. Risk comes and taps you on the shoulder and says, you can't work with that guy anymore. You don't have a choice.
Mm-hmm.
You have to make that decision. So even in a world where, you want to make, something happen for someone, there's another team that's also involved as well. In the same way for us as well, right? We go through the compliance process, we go through the KYC process, and we determine that a user can't be onboarded, whether it's a friend or a colleague or someone else that we know, they're not getting onboarded. For the average person that wants access to Plasma One, that wants access to hold stablecoin balances and spend, they're looking for the most frictionless way to be able to spend their money internationally. I had a friend recently who reached out to me and was excited that he onboarded his friend who was stuck and he couldn't actually pay for his hotel in France. And he downloaded Plasma One and in a couple of minutes, through our KYC process, through our compliance process, was able to get an account and to be able to pay for his, process at the bank. At the hotel. And that was a life-saving moment for him, right? That he didn't have to get booted out of his hotel because his, bank wasn't able to process the transaction.
So that's a good news story, right?
Yes.
That's where it can work really well. What on the other side, when we talk about, the Disability Act, Equality Act, what about somebody under duress? If they can do it that quickly and have access to money that quickly and pay it away that quickly, are we not opening up for people to be taken advantage of and exposed in that way? How would you protect the vulnerable of us out there?
With great power comes great responsibility, but the more important thing to think about here is actually what exists today when it comes to, we talk about the Disability Act or we talk about people being under duress. This exists way worse in traditional banking terms than it does in any other case, right? I send out a wire, I can't retrieve it back. I don't even know where it ended up going, right? If I make that transfer from start to finish, people in this country get scammed from telephone calls all the time. The elderly, the poor, people who don't know any better are the number one, let's call it prey in this case, for really bad actors to go and get, targeted. So our process exists at the forefront of technology, and we want to use as many technologies to make sure that we can go ahead and mitigate any sort of outsized risk that exists for more vulnerable groups.
I kind of see where you're coming from, but in terms, again, you can hire somebody that can be, looks you in the whites of the eye and you hire that person and you put your trust in that person. And yes, you're always going to have fraud out there. People are, working their ways around to make money from money. But I guess in that instance as well, when you're having a conversation with a person, you have that intuition sometimes as a human as well. And we're talking about the decent human beings in the world. You see it a lot, right? Especially the older, and I've almost fallen victim to it as well. Being a full-time working mum, you're trying to juggle 20 million different other things all the time. Pick up the phone and somebody just gets you and, pull on the money and the heartstrings. Your money's frozen. We need to. You can fall into that trap. I don't know where I'm going with this point now, so I'm going to stop there. But I think what I'm hearing from the stablecoin more is that maybe some of us have come in here thinking about crypto and how accessible. You talk about US dollar. How accessible is it to other currencies right now?
We go wherever the user wants us to go as well, right? So, we're going to give access to as many G7, G20, and hopefully as many currencies as we possibly can give. But the overwhelming majority of stablecoins are denominated in dollars. I'm talking something like 99%. And that's because that is the choice currency that these users want to hold. They have the most reliance on the model that the U.S. has built out. And so they're saying, I want to hold my dollars. I want to hold my value in dollars as opposed to other currencies.
Banks have spent decades positioning themselves as the safeguard against financial crime, whilst institutionally laundering more money than the crypto market has ever touched.
Hi. I think that, and I'm just putting this to you, right? I think the security the aspect that pretty much has come up time and time again so far in this conversation is security, the most vulnerable, how we scale it. What's the secret behind these crypto fintech companies that they're not sharing with us? At what point does the Bitcoin community come out and say, as a formula, and say, this is our security policy, this is our structure, let's present it as a format to the World Bank or wherever else you want to go, to the FSA? Because it's that point, isn't it? It's like the gold rush in the United States, yeah? You built up and you build up, and then somebody comes in and said, let's formalize all of this. I think, it's got to happen. That's my view. I think we're just in the passage of getting that acceptance, yeah? It's a bit like a relay. At the Olympic Games, when you pass that baton to the next person. But at what point do you sort of all wake up and say, this is what we're going to do, this is how we're going to make it to the next level of conformity, to basically give that complete confidence in the consumer?
We're already there. We've already reached that limit. I think when you think about, crypto, digital assets, stable coins, whatever you want to talk about, they already have institutional adoption at a rate that consumers haven't even adopted it in the West in particular. When it comes to looking at digital assets broadly, you have to remember that they are a technology. Inherently, the technology should not necessarily be regulated because at the fundamental level, that technology just exists. If someone creates a telescope, we don't need to have a governing body on how to use a telescope. The local laws and regulations of the country can go ahead and determine what the precise, diameter and this and that need to be, right? In the case of, Bitcoin or stable coins or blockchains, every government should go ahead and have their own kind of policies set on what they want to, go ahead and have that practice. The technology itself does not necessarily need that. It's an open, free to use technology for everyone in the world, and people in different jurisdictions and countries can go ahead and see, and use it how they see fit. Going back to the other topic of conversation, which is, talking about the level of conformity, BlackRock's Bitcoin ETF is already, I think number 1 or number 2 highest fee paying ETF globally for BlackRock. Which is the largest asset manager in the world. We're at a level of adoption, we're at a level of institutionalization that exists within, blockchain and, digital assets broadly that I think consumers haven't even grappled with. We have, trillions of dollars in annual settlement that are already going through stablecoin rails. There's more processed on stablecoin rails between USDT and USDC than gets processed by Visa and MasterCard annually. The problem is that the rate of change of technology is so rapid. You see this in AI, you see this now in crypto, that consumers can't actually catch up to what is happening. And that's actually why we've had so many issues with trying to get regulation done, with these technologies, because the government can't even move nearly as fast as obviously the technology that's coming out.
But there's another question I've got for you. So if we were, let's say, because I think we're going to get to the tipping point, okay? There is going to be the tipping point, whether that's the next 2 years, the next 3 years, the next 5 years. I haven't looked at the stats, where traditional banking, right, is potentially under threat, okay, depending on how fast the regulators get there. So if you were the head of this new virtual cryptocurrency association globally, okay? Sure. The World Bank of crypto, whatever, sure. Okay? Give me just fundamentally 2 things that you could do if you could click your finger tomorrow and regulate 2 things. You can give me 3, okay, that you would bring crypto into that conformity to basically say overnight, this is what the crypto industry association is going to do to actually give complete consumer confidence.
I think the most important thing that we could do is that we don't have the enforcement and judicial branch of any Western government that is moving at internet speeds. So the problem is, we've talked a lot about this here today. We talk about court orders. The problem isn't whether or not a court order is legitimate or not. The problem is that the court orders are not moving at internet speed when the finances are, when AI is, when technology is broadly. So you now need the
court
government.
System's way behind in everything, but go on, carry on. So that's what law is, isn't it? Yeah. Us innovators go ahead, they catch up.
But the problem is that the rate of change has been too fast, to the point where, most of the times the issue that exists is not that people think that this is a good actor or a bad actor. The problem is that a court needs to decide. That court takes weeks, months, years to determine if someone is a good actor or a bad actor. That crime has happened. The victims are there. People,
Do you have cyber judges, do you think?
You need to get to that point. Yes, you definitively need to get to a point where the court chancery is actually able to move at internet speeds and issue verdicts as fast as possible. AI will help us get there, but that's kind of where the future is moving already.
And number two?
Number two, I think we need to make stable coins and any sort of digital currencies, number one, regulated within the frameworks of any government, but also fungible with the existing currencies that happen at, any country in and out, right?
Just a real quick question.
Yes.
In terms of those, this last sum up, in terms of those countries you mentioned, okay, who's closest to it at the moment? The US?
It's always what the U.S. determines, and then it moves down the list to other countries because the U.S. monetary policy is what dominates the global trade of the world.
Yeah, I think it's going to be interesting, just to sum up, what the 2027 Act of Parliament does here, and obviously what the Europeans are doing, and whether they can speed it up a little bit quicker, because arguably, I would say the European Union and the UK economies, okay, need to act quicker.
I don't think I agree, but I don't think they will. And they've tried to do this in a few ways, and they've kind of gotten burnt. The problem is when you move outside of lockstep as a Western country with the U.S., when you have two competing sets of, kind of regulations, and usually I think the UK is kind of in between, but the EU in particular is usually very conservative in their point of view. It ends up draining talent from the EU, and they migrate to the U.S. And then the best, the more kind of liberal economies get developed in the U.S., and you see this pattern over and over and over again.
Super. Thanks.
Thank you.
Banks charge you for your own account, your transfers, your overdraft, your transactions, for the privilege of holding your own money. Stablecoins bring that cost of money to zero.
Hello, Stacey again. I'm not a fan of how much it costs to have a bank account, but you not charging me means something else is going on that I don't know about for you to make money. Tell me what that is.
The thing that's going on is that the technology has gotten materially better, and that we don't have to have archaic processes anymore for how we operate with money. The reason why banks can have to charge you at the margins on a lot of different things is because they have so many personnel, they have so many people that are in between different kind of forms of, money, whether it's processing a check, doing KYC compliance, that kind of thing. Now in the, new age of technology, you don't even need to have physical branches anymore. So you're seeing more and more players moving to the financial, in the technological age. And with AI, it's going to happen even more.
Before we even get to this AI, I just want to say, I've been thinking about, you have your deposit in the bank, and you have my money, which I've invested with you. So you're not putting my money in your account, and if you're leaving my money in a bank account that you are associated with, why are they just not taking my money out of the account and making more money for themselves with it and not giving me the interest on that? Why am I not earning interest on money I deposit with you?
With me or with a bank? With a bank,
no, with you, because you're depositing my money in a bank.
Well, we're giving you the yield.
Are you? Okay. I didn't realize that.
The bank is not.
Okay. You have to pay personnel for the KYC.
Correct.
So you do have expenses.
We don't have nearly the same headcount that banks will have. And this is an ongoing trend with every new technology company. You want to use more and more technology and less human, kind of interaction, only because at the touch points that, are valuable, right? Because for one, it saves costs, but for another, more important things, humans are kind of they end up being the problem when it comes to a lot of the nefarious activity that goes on in a bank.
Are you using AI for your know your client stuff?
Not for the KYC stuff yet, but we want to get to a world where we are doing it in a compliant, risk-free way that is also saving our users more money and giving them, even higher chances of getting onboarded in case of, restrictions that we can place, and also monitoring for bad actors over time as well.
Okay. And final question about money charging. When I use, say, my Visa in a credit card capacity versus a debit card capacity, I get charged. Is that going to not be the case with a Plasma One Visa, where there's no extra charges?
The charges that exist at the merchant level. So there's two types of charges. Visa can charge you fees, call it FX or interchange that they charge the merchant. But the merchant has the determination to actually be able to outsource that to the user or to warehouse it as the cost of, doing business. It's very easy for stable coins to exist in the ether and not really exist in day-to-day lives of people. We're not building Plasma One in a vacuum where people can't actually access it. We still need to work with Visa. We still need to work with players that, and systems that people have in order to make it very compatible for their day-to-day existence. If you're used to using Visa, I'm not going to ask you to start using a different system altogether. But over time, the goal is that more and more of these intermediaries will be, disrupted.
Okay, I still am not clear about, is it a credit card or a debit card?
It's a debit card.
Okay, so there are no
Today.
fees.
Yes.
Meaning?
Meaning in the future, we might be able to issue credit cards, and that's the goal that we want to have.
Instead of or in addition to?
In addition to debit cards.
Okay, so I can always opt for the free option there.
Correct.
Thank you.
Thank you.
My name is Fabiola. I'm investment banker and AI marketplace entrepreneur. Going back to the question, yield. Let's talk about yield. I give you my dollar. You say you peg 1-to-1. My question is in terms of returns. You do XPL. I don't know. Do you trade Coinbase or do you trade Binance with the money to give the parity 1-to-1?
So XPL has no bearing on the stablecoin. The stablecoin that's issued out of that people want to deposit into gets converted to dollars anyway. But, in terms of the stablecoin that people can deposit into, it's issued by Circle for USDC as the most popular one, or Tether, which is the other most popular one. Yeah.
So,
but they don't hold any XPL exposure. XPL is just our network asset.
Right. And the underlying asset is the treasury. It's the government debt.
Yes.
Consider the current environment, right? We got Hormuz, the Strait of Hormuz that probably is going to be closed for a while.
Sure.
Trump just came back from a beautiful trip in China. Fantastic relationship with China. So what's going to happen if Taiwan, if he decides to support, if he decides to become the owner of Taiwan because it's major interest in ownership? What's going to happen? How are you going to keep the peg? Because that's going to be a tremendous volatility if Trump decides to step in the Xi toes. China going to say, I'm not going to no longer buy your debt. Yeah. Who's going to buy the debt? It's going to be the U.S. because the Clarity Act, that's going to be approved next month.
Correct.
The U.S. got major interest if someone's going to buy the debt.
The U.S. government loves stablecoins.
Right, because of the debt.
Correct.
So what's going to happen with the volatility? Because major of the retirements in the U.S. is in the stock market. Stock market is becoming very volatile, especially with the IPO that happened this week.
Sure.
So explain to me how you're going to manage this volatility. Let's say if I want I'm super pro stable coins, but I want a little bit of security, a little bit. I understand volatility, I understand risk, but how are you going to manage that? Are you going to trade? How are you going to?
It's important.
I think the question is risk management here.
Sure. It's important to make a few distinctions here, right? Number one, we are not the stablecoin issuer in this case. So for the two most popular stablecoins that exist, USDC and USDT, these are two separate companies that issue their own stablecoin. USDC is a US regulated and globally much more regulated stablecoin, and USDT is much more of an offshore dollar that exists and has way more popularity than USDC. Both of these companies issue stablecoins, and they have their own holdings of what makes up the backing of their stablecoin reserves. For them, that is their decision to make up, and for the government to set the rules on what the ratio should be of the underlying assets that they have to hold. For us, our users only care about holding US dollar. So in a world where they are spending or receiving or sending US dollar, that's the only thing they care about. Now, there could be local FX risks that if we add more stable coins for longer tail currencies, euro, GBP, other currencies, that might be a consideration that maybe they want to move out of US dollars. They want to sit in Brazilian real or something else. That's their own prerogative. But we only care about making sure that every single day, $1 US that they deposit into our account will be the same US dollar that they get out at the end of the.
Right. And how about the yield? You promise a yield. You promise
that's
5,
only
3. How are you going to manage the yield? Your yield can go 5 to 2 to 0.
Yeah, and that's fine. And so long as the user has their dollars, they have to make sure that they have the same assumption that we do.
So the priority is really to keep the peg.
It's always to make sure that users have the money that they own themselves, that it never is something that is not actually what is displayed on the screen in front of them. So if I go to a bank and I have, $100,000, how much of that is in real circulation with the bank as a liquid ratio right away? I don't know, right? And the bank doesn't have to make that publicly available in terms of the liquidity ratio at any given moment to the consumer. For us, it's always going to be one-to-one.
So basically, the Clarity Act is really protecting the stablecoins.
The Clarity Act is actually putting on a really big clamp on illicit stablecoins, on long-tail stablecoins that are harmful to consumers, and it's giving even better, kind of affirmations for people who want to hold money in stablecoins, because it's a very rigid framework for stablecoin issuers to operate out of. Now, the important distinction is that this Clarity Act was also very much pushed by banking institutions, but the irony is that now stablecoins have a better rating, in my view, than banks do in terms of what they're actually able to do with the money that they have.
Yeah. Okay. All clear. Thank
you.
Hi, my name's Harris.
Hey, man.
I'm a financial data analyst apprentice. I've been saying it a long time and don't really understand the whole concept of stablecoins. I'm understanding it now. But essentially, isn't a stablecoin just a traditional bank with more steps, less protection, more volatility? I mean, what actually is the benefit of this,
What is the benefit for who? So let's dissect each one of these points, right? Sure. Number one, what does a stablecoin offer that a traditional US dollar might not offer? So it really matters to look at it where people don't have access to US dollars, which in the majority of the case for the world, people do not have access to US dollars or, stable currencies in general. For those people, it's a lifeline. It is the only way out. It's the only way that they can actually accrue value without their government, synthetically taxing them. And I don't mean literally taxing them. It's synthetically taxing them with high inflation or civil asset forfeiture or, basically just robbing them of their money. For most countries, they have extreme capital controls. They have very difficult, ways of, like subverting censorship. It's a big problem. So for these countries, it's like the only way out.
Right, but then for countries like, let's say, Afghanistan, where they're very, very heavily regulated, nothing's going to happen. They haven't got any access to the outside world, or like North Korea or something like that. How do you think that can be implemented there?
It's always on the ground, right? So the beauty of decentralized systems is that you don't actually need to have a centralized intermediary. If you have an internet connection, you can go ahead and, log on and get access. Now, there's obviously certain countries that we don't service as clients for, getting, Plasma One with full access for banking and whatnot. I fundamentally believe that, human beings in general in most countries are, good people and they should have access. But there's obviously laws and rules that we will not skirt around. So that's obviously, OFAC sanctioned countries will not have access in the same way.
So I understand you were saying about decentralization. Of course, being centralized, everything's in one place. But with it being decentralized, there's no autonomy. I mean, it's going to be all autonomous, right? So then who's actually going to be liable for stuff when it goes wrong?
When what goes wrong?
When, let's say, we see all these scandals going on. I think there was an FTX one with about $1 billion scandal.
Ironically, that was a centralized.
Oh, centralized bank. Okay.
Right. Well, it's a company and a guy who's defrauding users on a centralized platform, just like a bank, right? But on decentralized rails, you assume all of your own risk, right?
We take the risks on ourselves.
Yes, every person does.
But then, why not it be safer just to go through the bank where they actually are protected?
This applies in a country where you assume that the bank is a moral actor and that the laws governing that bank are actually equally applied for everyone. It doesn't always apply for most countries.
So if laws are governed, and they're going to eventually get laws governed on stablecoins and whatnot, then will it not just eventually turn into a stablecoin? I mean, like a traditional bank eventually?
We had this conversation earlier, but remember that the important thing is that stablecoins are not going to exist in their own universe without tapping into the real economy. Otherwise, there's no value.
So you're saying like hybrid type?
Well, there's just only going to be more and more convergence, right? We use a Visa debit card product right now, right? We have to. We would never want to live in a world where we're not using things that people use day to day, right? It's just we don't want to, exist in the realm of using products that aren't valuable to users or archaic, slow, boring, whatever it is. We want to give them the most advanced form of money we possibly can.
But boring and slow at the risk of losing everything.
There's no correlation between something being boring and slow and a heightened sense of security or safety. This is a myth that's been, kind of propagated by banks in order to determine that, the more time we take with your transaction, the better it is for you. This is nonsense. The KYC and AML checks that exist for banks, that exist for, any of these financial services get subverted all the time. HSBC has multi-billion-dollar fines that exist, just a couple of years ago, and it happens even day to day. It's just not everything gets caught and reported, and it's up to the bank to even be the one to determine that this malpractice exists.
So then, what do you think the step forward is then, in terms of stablecoin then.
Stablecoins are inevitable, whether or not me or you or anyone else wants to talk about them. The only thing that matters is making sure that governing bodies of a country are able to adopt in a way that makes sense for them and their people, the right rules and regulations behind stablecoins and their issuers and their usage. But at the end of the day, they're just a better way to move money around.
Yeah. Thank you. Makes sense.
Thank you. Hopefully by the end of this conversation, everyone's been at least convinced to be open-minded around stablecoins and Plasma One in particular. Just curious, how many people would try Plasma One after this whole conversation? 9 out of 10 hands, not just about. That's a pretty good ratio. So I'm very happy to see that. I think overall, there's a lot of really awesome points that were brought up throughout the conversation. And the work that we're trying to do with Plasma One, it won't be perfect day one. It won't be perfect, even in a year's time. But the goal is that we iterate every single day, and we can get better and offer the best financial services to anyone in the world at any time.
Awesome. Round of applause, guys.